Good morning, everyone. This is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis, market commentary, trade ideas, mechanical systems, and we've been doing this since 2003 for individual traders and major institutions. Okay, so let's go ahead and get started. The last video I did was on Monday evening, so I just wanted to do a very quick follow-up to that. It's going to be a quick video, guys, not a 30 and 40-minute video like I typically do. So first thing we'll discuss on Monday's video, I discussed the technical exhaustion condition in the market. This is the S&P 500. I showed that over a 19-day sequence. Out of those 19 days, 17 of them were up and only 2 of them were down. And as I showed you in TradeStation when I wrote the strategy, back testing over 50 years, there were only 3 examples of that. So in 50 years, extremely rare. And I said the market was due for at least a reversion to mean pullback back below, say, a short-term moving average. And lo and behold, as you saw over the last couple days, that's exactly what we got. So here's an updated view of that same strategy. You can see when I did the video, we were right here. Here's the short condition. And it closed yesterday because we went below a short-term moving average. Okay, we basically went below a 9 or a 10 SMA. And that's what I talked about in that video. So we got the reversion to mean. Congrats if you took some sort of hedges against existing longs to protect them, or you went short. But that trade basically played out. Doesn't mean we can't go lower. But remember, I wasn't looking for some major crash either. So let me just follow up on a few other things here. Here's the daily S&P 500. And again, you can see this progression. I had marked it on this chart. We had a couple doji candlesticks, one from Friday, one from Monday. Again, we were totally set up for some sort of logical pullback, and you can see we got that. All right. Looking at the other major indexes, the S&P, NASDAQ, Russell, again, we've all had nice, two-day pullbacks. But like I said, I wasn't looking for a major correction. Remember technical analysis, previous resistance, you see back here, becomes support. All right, and so the early September highs are now major support, as you can see. We didn't quite tag that area, but we got pretty close. And, doesn't mean market can't, go below that, but that's a logical bounce area, at least. So we'll see if we get that or not. Small caps, IWM, again, I just showed it in that image, but this is your major support. As you know, they broke out of this big 8th month consolidation range, and they did it on decent volume. Looking at an intraday time frame, you do at least have a little ABC zigzag type pullback here, which is what you needed. For my subscribers, I had pointed out that we had didn't draw it very well, but we had a bear flag here, and so that was a quick shorting opportunity. And so again, we got everything. Now we'll see if we get some sort of bounce. Looking at a couple other things. Here's the VIX. As you know, the VIX went uncorrelated. It was suggesting some sort of, make this image a little smaller. It had become uncorrelated down here. It was going up with the S&P. It was suggesting some sort of market correction, which we got, right? Here's another important thing. It did close outside its upper Bollinger Bands. That's important because when it closes back inside the bands, that's usually a pretty reliable signal as well. Some other things, the McClellan Oscillators, like the NIMO, the NAMO, they all closed below the lower Bollinger Bands. And while at times you may need 2 or 3 closes below the lower Bollinger Bands, sometimes you only get 1. And as you can see, it's usually a pretty reliable signal for the market to bounce. One thing that spooked the market a little bit was the movement in bonds. Sorry about these charts, guys. Jumping around on me. But there was an awful 30-year auction on Wednesday. It was all over the news. And, you know, maybe some of the world countries are not wanting to support our endless debt cycle. As you know, on Wednesday, there were data. Can't talk this morning. There were headlines everywhere about rampant inflation. So I went ahead and ordered my T-shirt. Inflation is only transitory, right? Last thing, not going to go through a bunch of trade ideas, but one trade idea that does stand out, COGT, unbelievable base here. I really like these things coming out of basing patterns. Sort of has a big wide inverse head and shoulder look to it, but nice looking pattern. Vime's been coming into it. And that would be your first resistance once this is broken. So really nice pattern. I think there's a few firms out there that have $21 price targets, but technically looks good. All right, guys, that'll do it. Let's see what happens today on Thursday and Friday. Have a good trading day and rest of your week. Take care.